Now it's time for the market wrap-up. What's happening this week, Ben?
Well, Claudine, last week we spoke about bonds and what the market has been signalling in terms of inflation. We're going to delve a little bit deeper into that today and see just why it is that this has become an issue all of a sudden. Viewers at home would be well aware that in 2020, COVID-19 plunged Australia into our first recession since the recession that we had to have all the way back in 1991. What was different about the COVID-19 recession is that it was a recession by choice rather than by accident, because we had governments literally shutting down businesses and telling people to stay at home. Following the start of the 91 recession, unemployment kept rising for 2.5 years, and it took 9 years to get back to where it had started. By contrast, the unemployment rate from the COVID-19 recession peaked last September, and it has been making steady progress ever since. In fact, the recovery from this recession has been so strong that you may have heard reporters calling it a V-shaped recovery. Little wonder when you look at the graph of Australia's GDP over the last year and a bit. GDP growth figures for the December quarter were released last week and showed that at the end of last year, the economy was just 1.1% smaller than it was at the end of 2019. If the pace of growth that we had in the December quarter has extended into the first 2 months of 2021, the size of the economy has probably already overtaken the pre-COVID-19 highs. So what does all this mean? Basically that the economy is performing far better than the government or the Reserve Bank expected it to. In fact, household incomes data showing a large spike in 2020 suggests that the government may have even overplayed its hand a little bit with the JobKeeper program and the Job Seeker supplement.
So Ben, what is 2021 looking like for businesses?
Well, Claudine, what seems very likely now is that 2021 will be a bumper year for businesses as vaccines roll out globally and consumers start to spend the record savings that they have squirreled away since the start of the pandemic. Bond traders are betting that as households loosen the purse strings, the economy will boom and cause inflation to heat up, and that may force the RBA to raise rates sooner than they have said. We're also likely to see a good year for commodity prices across the board because global production is low and that boom in demand should drive prices higher. And that's finance.
It's been a remarkable turnaround. Thanks, Ben.